Hmm.
Junk silver, I've been an advocate of junk silver for the last 10 plus years now. Um, it's the smallest denomination of silver. In other words, 14 dimes equals 1 ounce. I think it's $1.38 equals 1 ounce.
Hmm.
So that gives you 14 transactions in a system down scenario. If you're going to barter, now you've got the smallest unit of silver. It's recognizable because everybody knows what a dime or quarter looks like. And as long as it says 1964 or earlier, you know it's 90% silver. Gold was overbought. Silver was more overbought than it was in 1980, back at the
Mm.
peak. And what you've seen with both of them are high level consolidations. Uh, the paper trade is waning and the physical market is growing. Uh, the physical markets are growing. Just look at what the BRICS are doing. I mean, they're opening uh, storage facilities, refineries. They're very serious about accumulating both gold and silver. And it makes sense because, for years and years, they had, I guess the metaphor is tons. They had tons of dollars on their books, and now they're adding tons of real money on their balance sheet. Yeah, I forget what the number is. It's something like 473 ounces or something like that. But yeah, that's silver that's obliterated. Can never be reclaimed. And uh, this in a market that is now in its fifth year of a structural deficit, supply and demand deficit. Right. Well, obviously, price tells you that they're losing control, but let's not even talk about price. We did mention that we're in a structural deficit. We've had a supply and demand deficit for 5 years, and that's what happens when you get a small a small market size wise as far as dollar amounts. I mean, the total production globally is only like $30 billion a year. But when you get a small market that's easy to manipulate, and if you're constantly manipulating to the downside and suppressing the price, what that does is it makes it much more difficult for producers to earn a profit, so they mine less silver. So a direct consequence is uh, the fact that we're in a structural supply deficit. Other things to look at, you can look at the lease rate on silver. You can look at
Hmm.
the lease rate and the amount of shorts available on SLV, which is strictly paper. That's not actual physical silver. But the rates to borrow, it's blowing the shorts. The shorts are being blown up.
Silver's supply chain has quietly slipped into its fifth consecutive year of structural deficit. Even as industrial use accelerates, from solar panels to advanced electronics, mining output continues to struggle. Years of suppressed prices discouraged investment, forcing producers to scale back operations. With global annual silver production worth only about $30 billion, the market remains tiny and easy to distort. Rising lease rates and reduced availability of borrowable metal now indicate severe strain. Short sellers face mounting pressure as physical silver becomes harder to source. This imbalance signals that traditional pricing mechanisms cannot hold, and the physical market is beginning to overpower the paper system.
No one can tell you that, and if they do, they're making up a number. I've said for years that on gold and silver, the numbers that we're going to go to are higher than anyone has projected of any number for gold or any number for silver. The actual number, I'm convinced, is going to be far higher than the most optimistic projection there is. And the reason being, gold and silver what they've done is they've sold paper contracts against gold and against silver that don't exist. And we're going to move into a failure to deliver scenario. And when that happens, man is a funny animal. When you tell man he can't have something, he wants it that much more.
Yeah.
And I mean, you're talking literally trillions of dollars that are going to be dislodged from the stock market, from the bond market, even from the crypto markets. And all that money is going to be pointed toward gold and silver. Those markets, I mean, especially silver being so small, they cannot handle the type of capital that's going to be heading toward a safe haven or the safe havens. And one other aspect of man, fear is the greatest emotion there is. And people are going to be moving money into gold and silver, not out of greed, because, I can buy gold at 50 and I can sell it at 100 or 200 or whatever. That's not going to be the motivator. The motivator is going to be fear of losing everything in other markets and putting that money into something that is a safe haven and cannot bankrupt. That's the whole key. They can't bankrupt in a world that is defaulting.
For decades, large institutions issued paper claims on gold and silver far exceeding the amount of real metal backing them. As long as few demanded delivery, the system functioned. But now, physical withdrawals are accelerating, and available inventory on major exchanges is thinning. If delivery obligations cannot be met, the entire pricing structure could snap. Human behavior becomes the wild card. When people are told they cannot access something, desire intensifies. Should confidence break, capital could rush out of stocks, bonds, and even crypto, markets measured in trillions, into assets that are limited, tangible, and historically trusted. Silver, being extremely small, would feel the shock first.
Well, you remember the big lines that we saw a month ago in China and in Australia and in other parts of the world, where people were just waiting like blocks and blocks, in line from the entranceway of these different bullion sites. And there was no shortage of silver or gold or anything of that matter. It was just a huge price spike. One could argue that, it was mainly driven by
shortage.
Go ahead.
There was a shortage.
That's true. There was in China.
There was in China, but also there were limits on the amount that customers could cash and carry out. So they did try to ration what supply they had.
Yeah, and that's like that's just a fraction of the kind of scenario that we're kind of thinking up in our heads. Because there's no real, there was no danger of the fiat currencies are devaluing. You look at the money supplies of, the US dollar, the RMB, the euro, the Japanese yen, all of them. They're all going up at the same time. But there's no real imminent threat that your currency is going to be devalued to the point where you have to go out and, spend whatever you have and procure the metals ASAP. But that was a very small sample of what was to come. And it was pretty big. Those lines were pretty big. Especially in Asia.
Well, the biggest lines you don't see, and I don't see, nobody sees them. The biggest lines are the electronic lines.
Mm-hmm.
Once you get full-fledged movement from, family offices, hedge funds, they're smelling blood in the water. Once we get to that point, it's going to make what we've already seen look like not even just barely a starter.
Yeah, and we're already starting to see crypto sell off. Bitcoin is down to 90,000 some odd dollars, but gold and silver have both held on fairly steadily. It appears that crypto is highly correlated to the Nasdaq, which is atypical of a safe haven asset like gold, and to somewhat of an extent to silver as well. Silver does have some industrial usage too, but when I look at silver and I hear these arguments that silver is more industrial than monetary, but doesn't the fact that silver have utility kind of make it more valuable than gold, or the fact that silver has more utility than gold, shouldn't that make it more valuable? Holding the supply side constant.
Well, silver's got many, many uses. It's not just industrial. You've got technological, you have medicinal. Go back hundreds of years. You remember the term, he was born with a silver spoon in his mouth. Well, only the wealthy people could afford silverware. And the reason they used silverware was because the antibacterial
properties.
The antibacterial that properties of silver, right? Exactly. Gold is basically strictly money, and silver for several thousand years was also money, but it has other uses. It has more uses than any other element on the planet. You want to keep an eye on the Japanese interest rates and also the Japanese yen, um,
Mm.
because that is uh, it's the bed, if you will, for the carry trade. The carry trade that had been put on. I mean, they were doing this back in the 90s, early 2000s. You could borrow in yen at low interest rates, and you could just turn around and buy U.S. Treasuries and make the spread, and that's fine as long as interest rates don't rise in Japan, and it's fine as long as the yen itself does not rise in value versus the dollar. It was a cheap way of funding, and it's being shut off. Not only is it being shut off, but it's turning some of these carry trades upside down because the rate to carry is higher, and the cost to buy the Japanese yen back is higher. So the carry trades are blowing up. That's what that chart is showing you.
Demand for bullion has already produced long lines at dealers across Asia and Europe, even without a major currency crisis. In China especially, shortages triggered rationing, forcing customers to wait hours for limited supply. These events represent early glimpses of how quickly sentiment can turn when fear replaces complacency. Most people do not rush to gold and silver seeking profit. They do so to escape perceived danger elsewhere. In an environment where national debts expand, currencies lose purchasing power, and financial institutions wobble, safe haven assets become psychological lifelines. If large funds and family offices join retail buyers, pressure on physical supply could accelerate sharply.
Right. But you also have the 30-year yield here on the U.S. side. I mean, that's also somewhat, I mean, that's still trading at a premium to the 30-year Japanese bond. Currently, you've got the 30-year at 4.73. Is the number to look out for? Is that when the 30-year, or sorry, when the Japanese 30-year begins to overtake the American 30-year?
Oh, yeah, well, that would certainly be a cause for alarm. But just this elevated level, I mean, if you're looking at the chart, it's straight up.
Yeah.
When is that going to stop, or does it stop?
So what is this implying about Japan's current status?
In my opinion, I mean, look at the debt to GDP level in Japan. I mean, they're at what, 300% or thereabouts.
Oof.
And you go back into the 1970s and early 80s. I remember when I was in college in the early 80s, any country that got to 100% debt to GDP, they were opening the door to Banana Republic land. And now there's hardly any countries around the world that are under 100% debt to GDP. I mean, the U.S., the issuer of the world's reserve currency, is at 130%. Back in 1980, the United States would have been considered a banana republic. And actually, I mean, as an aside, if you look at the rule of law and the things that are happening in the United States, there's an argument we are a banana republic, financially and judicially.
Well, it does appear like the controllers or the elites or whatever you want to call them, they're just plundering everything before this entire ship comes down. They got to get while the getting's good.
Right, and that goes along with what we've talked about before, the great taking. They know it's coming.
I mean, isn't this 50-year
and the
mortgage?
One thing about that's a joke, the 50-year mortgage. I mean, that is absolutely hilarious. I posted, when the day that came out, I posted to my website, a couple articles on that, and that is so bad. That is so. Yes, it lowers the monthly payments, but it's putting people on the gerbil treadmill. It's just that is stupid, in my opinion. I did want to mention the other thing with gold and silver. You've got the two markets. You've got the paper market, and you've got the physical market. And for years and years and years, the paper market acted like the tail on a dog that wagged the dog. In other words, paper markets made pricing. They priced the market. The problem now, because with COMEX and with LBMA, you have buyers that are lining up to take physical off the exchanges. The problem is they can't print gold and they can't print silver. The only thing they can do is print contracts that, when all is said and done, they cannot perform, which makes them worth zero. So all I'm getting at is the physical markets are taking over here.
Yeah. And we saw that happen a few weeks ago when we had this point of backwardation in silver. And now the gold spot market is getting awfully close to the futures price in gold as well.
Right. Yeah, silver's still got slight backwardation, but I mean, all the lease levels, all the borrow rates, everything's elevated. It just reeks of a massive short squeeze.
A deeper stress is emerging from global bond markets, especially through Japan's unwinding carry trade. For decades, investors borrowed cheaply in yen and moved funds into higher-yielding assets abroad. But rising Japanese rates and a strengthening yen now threaten those positions. The cost to repay yen-denominated debt is rising, flipping profitable trades into losses. This turmoil intersects with historically high debt levels. Japan approaches 300% debt to GDP, while the US hovers around 130%. Such ratios once defined unstable banana republics. As these imbalances worsen, investors question the reliability of fiat systems, amplifying interest in metals that cannot be devalued or defaulted upon.
Now, there's many different roads to take when it comes to converting and allocating your capital into gold and silver. I know you're big into junk silver as a means, as kind of like a means to do so. Why is that? And I know you have some stuff that you want to talk about junk silver on. Why is junk silver
and this is
the way to go, in your opinion?
This is for non-IRAs. In an IRA, you've got to do a product that's 99.9 pure.
Mm-hmm.
Junk silver, I've been an advocate of junk silver for the last 10 plus years now. It's the smallest denomination of silver. In other words, 14 dimes equals 1 ounce. I think it's $1.38 equals 1 ounce. Mm-hmm. So that gives you 14 transactions. In a system down scenario, if you're going to barter, now you've got the smallest unit of silver. It's recognizable because everybody knows what a dime or quarter looks like. And as long as it says 1964 or earlier, you know it's 90% silver. It can't be counterfeited, because if somebody comes to you with a bright, shiny, brand new dime or quarter, it's probably fake, because junk circulated for years and years and years. It was in people's pockets. It should be scratched. It should be dirty. And on top of that, it is U.S. mint lineage coin. Now, the reason I wanted to talk today about junk is because the pricing on junk versus other forms of silver have temporarily collapsed. I think dealers are bidding $4 and $5 under spot if you go to sell it, and you can buy it at spot, maybe 25, 50 cents over spot. It's the cheapest form of silver available right now. The reason being, back in the late 70s and the early 80s, I'm not going to say it was the only means, but the primary means of Americans that wanted to buy silver, the junk silver, that was really all there was available for investors. So you had, I don't know, well, you've had years since then too, but you had 5 or 10 years there where people were accumulating silver. They saw the $50 peak. You had some buyers, of course, at that level or in the 40s, and they hung on for 20, 30 years plus. What's happened is a lot of that legacy silver, when the price got to $50, people started selling. People and large hoards have been sold. What's happened is the dealers don't want to hold all of that as inventory. So if they're bidding 5%, 7%, 9% under spot, they take that junk in, they send it to a refiner, they refine the silver out of it, and then they sell that silver on the spot market, and that's how they make their profit. The problem long term, now this is a short term problem because refiners are backed up. Some refiners are even refusing to take more junk in. They're backed up. But once this backlog gets done, the discount will abate. It'll come back to spot or above spot. And going forward, there's way less junk silver left in existence because it got melted down. So if you're buying silver today and it's not an IRA account, it's foolish to not buy junk silver. It's the best form for an American to own, and it's the cheapest.
As tensions build between paper markets and physical demand, different forms of bullion are being reassessed. Junk silver, pre-1965 US dimes, quarters, and halves, is emerging as a sleeper favorite. It offers small, recognizable denominations, ideal for barter, carries US mint credibility, and is nearly impossible to counterfeit. Temporary distortions have made junk silver unusually cheap, as dealers melt down old hoards taken in during past price spikes. Once refinery backlogs clear, premiums are expected to normalize, and available supply will be permanently reduced. For Americans outside retirement accounts, junk silver has become one of the most efficient and practical ways to acquire real metal.